Seven-figure squad, seven-figure squad. We don't stop, we multiply. Seven-figure squad, run it up, we raise the bar. Seven-figure squad, say finesse, we going far. Seven-figure squad, who are we? Seven-figure squad, what we do? Run it up, run it up. Who are we? Hey, seven-figure squad, what we do? Run it up, run it up. Started from zero, got God in the plan, yeah. Now I'm counting blessings, got wealth in my hand. Used to dream small, now the mindset grand. Now I move like a boss, not a flash in the gram. It's a squad, not a clique, it's a mission with a vision. We building seven figures, not just flexing for attention. Faith in the grind, purpose in the hustle. I don't chase cash, I attract it through muscle.
We got mortgage guys trying to teach life insurance. We got creators telling people never to buy a house again. We got doom and gloom prophets predicting a world we own nothing. We got folk clowning billion-dollar discipline. Plus, we got buy now, pay later, turning Christmas into a debt trap. 1 in 4 Gen Zs use it like it's a blessing when it's actually financial bondage. But listen, I didn't come out the Marine Corps to say America's going to get softer, America's going to get weaker. But today, more people are confused about money. I built a multi-million-dollar agency because families need truth, not TikTok or social media theology. They need stewardship, not shortcuts. They need discipline, not debt-driven dopamine. Proverbs chapter 12, verse 15 says this: the way of a fool is right in his own eyes, but the wise listen to counsel. So today, we're going to break down these viral takes. We're going to separate fact from foolishness and give you the real battle-tested financial mindset with experience that builds freedom in this country. If you're ready to level up your faith, your finance, and your future, smash that like button. Drop "let's go" in the chat section. Let's dive into it. Starting in 3, 2, 1, let's go.
Who are we? Hey, seven-figure squad, what we do? Run it up, run it up.
All right, let's get into this. First guy here says, here are 4 types of life insurance. Let's check this out.
Is whole life insurance a complete waste of money? I'm going to break down 4 types of life insurance quickly, and at the end, I'll tell you kind of my opinion. We're going to do term, whole life, IULs, and infinite banking. Term life insurance is what I recommend for probably 90% of people. It's what insurance, in my opinion, is supposed to be. It protects you for a certain term, hence the name, 10, 20, 30 years, and during that term, if anything were to happen, you or the beneficiaries get a payout. Term life insurance can be really cheap, like $1 or $2 a day, and I suggest usually getting somewhere between like 5, 8, 10 times your annual salary in coverage. Whole life insurance is basically a forced savings plan. Instead of paying $20 a month, you're going to pay like $500 or $700 a month. Some of that is going to go to the insurance portion, and some of that is going to be invested. You're going to get probably like a 4 or 5% return, about half what the stock market gets, but it's going to force you to invest. The problem is you're going to pay 20 times more than term life insurance, and on top of that, get half what you could get inside the stock market. The reason so many of us are pushed into it is because salespeople make a killing selling this, and that's why you're going to see a bunch of them down in that comments telling me I'm wrong. Number 3 is an IUL. It is very similar to whole life insurance. Some of it is going to go to insurance, some of it's going to go to an investment, but they tag it to a specific index, but then cap you. What makes the stock market good are those good years, and you're giving up all the upside potential of the stock market during those good years. Infinite banking is a strategy you can use with IULs or whole life. When you get a whole life policy and put hundreds of thousands of dollars into it, eventually you amass this cash value or that investment arm. You can actually take a loan against it to go do other things. So let's say I've amassed $300,000. I can take a loan against that policy just like you would take a loan against your house, and you can go use that for other things. For 90% of people, you should get term life insurance, invest the rest. Don't be sold by a salesperson to try to convince you to whole life. It does work for some people, but a very small majority.
Listen, of the 4 things he talked about, 3 were actually life insurance, and 1 was actually strategy of using life insurance. So listen, all right, let me speak to this respectfully, because I don't know this guy personally, but I do know the industry that he's critiquing. And here's the truth. There's a massive difference between having an opinion on life insurance and actually having experience in life insurance. And my team tells me that this gentleman was a former loan officer, mortgage loan officer. Great. Respect the pivot that you're no longer insurance branded. You're branded as an entrepreneur on social media. But moving from mortgages to social media doesn't give you the authority to speak on products you've probably never sold, never serviced, never delivered, never underwritten, or seen in the field for 26 years like I have. Now, let's address his points quickly and clearly. Number one, term works 90% of people or for people. Now, if that were true, life insurance companies would stop offering everything else. See, term is great for pure protection. And guess what? Our insurance agency, we sell tons of it. But here's what he didn't tell you, that most people outlive that term, like almost 99%. They outlive the 10-year term or outlive the 20-year term or outlive the 30-year term. So the coverage expires right when people need it the most. When? In their 60s, in their 70s, in their 80s. And that's why fortified financial plans use both for protection and long-term stability, not either or. Number two, whole life is a forced savings plan. Oversimplified and actually incorrect. Whole life isn't for everyone. That's true. But it's not 20x the cost. That's lazy math, my guy. And it's not a 4% return. That's half truth taken out of context. See, whole life exists for people who want permanent protection. They want tax advantage accumulation. They want stable, contractually backed guarantees by a life insurance company. They want predictability over volatility. They want legacy planning. They want wealth transfer. Of course, they want long-term protection against longevity. So stock market investing and life insurance do not serve the same purpose. They're two different things. This is why wealthy families use both. Number three, Index Universal Life caps upside. This one proves he doesn't understand the product. An IUL does not cap your net worth. It caps the index credit in exchange for what? A 0% floor. So when the market crashes, you have zero negative return because of stock market influence. So you can't lose money in down years. You get a portion of the upside in good years, you get long-term protection and flexibility, and you aren't exposing your family to market risk inside the policy when the market corrects. So it's not designed to be the S&P 500. It's definitely not an investment. It's designed to not collapse when the stock market does. See, this is stewardship. Number four, salespeople push it because they make a killing. This is a classic sign of someone who has never seen a commission statement in his life. For example, term insurance pays more upfront commissions per dollar. Permanent insurance pays less upfront, but yes, more consistently over time with renewal commissions. So saying agents push whole life for commission is not only false, it's ignorant. And let's be honest, big dog, every industry has sales incentives, including mortgage professionals, real estate professionals, and in this case, influencer sponsorships. Wink, wink. Number five, insurance is for catastrophes. Investing is for wealth. Now, that sounds cute on TikTok or Instagram, but it's not how the real financial planning or insurance planning strategies work. Insurance protects income. It protects assets. It protects families. It protects your life's work. It prevents wealth from being stolen through taxes, through probate, through losses, or bad timing. The Bible says in Proverbs 27, verse 12, the prudent see danger and take refuge. The simple keep going and suffer for it. See, protection is wealth building. You cannot separate the two. Now, I don't fault this brother. He's an influencer. Opinions pay his bills. But I've sat across tens of thousands of kitchen tables, family rooms, and boardrooms. I have delivered death claims. Our guys have issued insurance benefits through living benefits from life insurance policies. And we've structured policies for pro athletes, for families, and business owners. And I've seen what works in real life, not what sounds clever in a 60-second clip. So to anyone listening, don't build your financial future on someone else's opinion. Build it on understanding. Build it on stewardship. Build it on strategy. Build it on what works for you. And that is why people follow me. All right, so this next clip has this young lady talking about she'll never buy a house again because mortgages are a scam. Let's check this out.
So my husband and I refinanced our mortgage today because interest rates dropped, and it was enough to save us $300 a month. However, I have in my hands the amortization schedule, which is how long it's going to take us to pay off said mortgage and how much would go towards principal and interest each month. And I want to use this to talk to you about why home buying in America is an absolute fucking scam and why this will be the last house we ever buy in this country. So just really quick facts, it's a standard 30-year mortgage. It's a VA loan, so I didn't have to put anything down in order to refinance, and I don't have to pay any mortgage insurance, which is what normal people have to pay when they don't put 20% down. But because we didn't put anything down, I went from owing $784,000 on my home back up to $795,000. But my original interest rate on this house was 6.2%, and now it is 5.6%. We are planning on selling this house when my husband retires in 4 years and exiting the US. So of course, I was interested to see what will I owe at that time in 2030. And at that point in 2030, we will owe just under $750,000. So I will only have paid off $50,000 worth of my mortgage in the next 4 years. But the math ain't mathin' because my payment is $5,700 a month. $5,700 a month times 50 payments is $285,000. And if you look at the schedule, it tells you, oh yeah, you're financing $795,000, but if you kept this interest rate over 30 years, you're actually going to end up paying $1.6 million. But the biggest scam of all is how much interest they charge you the first year you own the house. And I have other videos on this. I've talked about it. Again, I put myself in this situation. It is what it is. The point is I'm calling out the banks because they are fucking ridiculous. First of all, when you come to closing, we bought $7,000 to closing. They make you pay $3,500 in upfront interest. So not only are your first 12 payments horrendously just put towards interest, but then you have to bring extra money to closing just to pay interest upfront. Now, I will say this, our principal and interest amount is $4,500, and it's our taxes that are additional $1,000, which is how we get to that $5,700 number. Our first payment is 11/1 coming up, right? $4,500 payment, only $849 of that goes to principal. And every month after that, only $4 extra of your payments goes towards principal. My very first payment, $4,500 payment, $3,700 of that goes to interest. So even though over the next 12 months, I'm going to make roughly $54,000 in principal and interest payments, not including taxes, according to the amortization schedule, I won't even have paid down the mortgage a total of $10,000.
All right. Here's what almost everyone misses. In conversations like this, military veterans, listen up. Our brothers and sisters, listen up. She apparently refinanced the house, okay? And by the way, you're not borrowing money from grandma and grandpa. You're borrowing money from a financial institution, $750,000. But for those of you who are looking to buy a $750,000 house, think about what she also just said. With the VA loan, that's zero down. So she must have done a streamlined VA loan refinance. In other words, her original purchase, there was zero down payment. And now she's just refinancing her house. It looks like she went from 6.2 to 5.7. I think that was the numbers. But she's basically refinancing to save monthly cash flow. So, young lady, you didn't lose money. You actually preserved money. Massive difference. See, most buyers, if they're going to buy a house like this, they needed $37,500 or $150,000 down payment, depending on the loan, if they didn't have the benefit of a VA loan, which, mind you, it's the only zero down mortgage plan in America today. See, you kept that money in your pocket. That's a win, not a loss. Now, let's talk long term, not just the emotional short term. If you keep that home and rent it out later, hello, you're helping out a family and building wealth. You see, homes in America, they appreciate historically around 3 to 4 or 5% per year on average. So your 750,000 homes, for example, like a 4% appreciation applied to it, becomes a $1.1 million home in 15 years. It becomes a $1.35 million home in 25 years. It becomes a $1.62 million home in 30 years, just being conservative. See, that's without doing anything special outside of you just paying your mortgage. That's just owning the house and letting time do what it does. Now, tax advantages as a homeowner, you've benefited. You are benefiting. And for the first 4 years as an owner occupant, before you decide to sell the house and move, you've enjoyed this. You've enjoyed mortgage interest deductions. You've enjoyed property tax deductions. You've enjoyed the ability to claim capital gains exclusion down the road when you decide to sell it. If there's a gain in the house when you sell it, protection against rising rents from people around you. You see, renters get none of that. And then after 4 or 5 years, when you convert it to a rental, think about this. Now you add depreciation, you add expense write-offs, you add repairs, improvements, travel if you have to go back and fix your property, all deductible. And rental income that can also offset the mortgage. See, you're stacking advantages. Your 30-year mortgage is actually a secret weapon. And if you keep the existing loan the whole entire 30 years, your payment stays fixed. Inflation eats the payment. Now rent goes up, everybody around you, but your cost stays the same. That means your cash flow increases automatically over time. And if you do what smart owners do, potentially using a strategic cash out refinance, perhaps 8 to 10 years from now, you unlock trapped equity that's currently earning you zero rate of return, and you get liquidity, you get expansion capital, or the ability to buy a second property or investment property. This whole time, you're keeping tenants in the first home or your first home, I presume it's your first home, while they're helping you pay down that loan for you. Now, emotion says this is stressful, but the math, if you want to math the math, says that was a smart move. You're only looking at the next few months, only looking at the next few years. But see, financial literacy looks at the next few decades. And the VA loan gave you a launch pad that civilians wish they had. Now, if you play this correctly, your family's sitting on appreciation, they're sitting on tax advantages, potential future rental income, potential future equity growth, inflation protection, bottom line, long-term financial leverage. And that's why I keep teaching ownership plus liquidity equals options. You see, renters, they don't get options. Owners do. You want to see exactly how to make this house work for you, not against you? That's why I wrote the best-selling book, Keep the Keys. So go to my website, keepthekeysbook.com right now and download your 2 free tools, which is a homeowner scorecard and a financial clarity worksheet. It'll help you make smarter, more logical decisions with the home you already own, so therefore the math can math, and keep you from throwing away one of the greatest financial opportunities that America still offers. Now, there's one guy I absolutely agree with because people are financially doomed if they buy into this whole rental subscription model. Check this out.
60% plus of affordable housing within the next 10 years. And why do you think that all the narrative between the media saying you're better off renting and not owning? Why do you think that is? Everything today is on a subscription model. You can never buy anything anymore. And guess what? These big corporations are buying up affordable housing like there's no tomorrow. I shouldn't even be saying this because I'm partners with some of these companies and I see what they do. If I put out $100 million and $90 million of projects being sold to those companies or their fucking proxies, I'm boots on the fucking ground. You have probably maybe 5 to 10 years to buy a house, or else you're probably gonna be renting from a big motherfucking corporation for the rest of your life. So if you want to be part of the solution to stop this from happening, from these motherfuckers buying everything up, please do me a favor and go out there and buy a fucking house. These motherfuckers are...
Dude, I couldn't agree with you more, man. You know, people think this whole conversation about corporations buying up American homes and neighborhoods is just a conspiracy until it shows up in your own life. Let me give you a real example. Right now, we're looking to move our local headquarters here in Carrollton, Texas to Frisco, Texas. I'm having a hard time finding office space. Not because there's no space. There's tons of them. Actually, we just went by the mix here. $3.5 billion are being built over there. There's a lot of space. There's a lot of opportunity for us to rent space. But because I'm not competing with local landlords anymore, I'm competing with real estate investment trusts and billion-dollar institutions who price everything for other corporations, not small businesses like myself, not entrepreneurs, not community builders like you and I. If it's this hard for a business, imagine what's happening to everyday families trying to buy a home. And that's exactly what he was trying to say in that clip. Institutional buyers, BlackRock, State Street Securities, Vanguard, that type of entities, they're swallowing up affordable housing. They're buying neighborhoods, not luxury homes, not starter homes, not first-time buyer homes. The homes working families used to be able to get into, they're buying them all up. And at the same time, the media keep pushing this narrative that renting is cheaper, you don't need to own, don't worry about it. Why? Think about this. A nation of permanent renters is predictable, it's profitable, and easy to control. You want to be controlled? And if he's right, these corporations will own 60% of affordable housing within the next 10 years. And then we're staring at a future where most families may never, ever get the chance to own anything again. And that's why home ownership matters. That's why Keep the Keys, I wrote the book. That's why it exists. Not just to own, but to own wisely, to stay liquid, to stay strategic, and protect yourself from becoming a tenant in your land and a land your family helped build. Listen, He's right. And corporations are on track to own 60% of all affordable housing in the next decade. Then the only families who will still have a real shot at ownership are the ones who start preparing now. Don't wait. Don't hope. Don't always assume that the door to buy a home is always going to be open. Go to keepthekeysbook.com and download the free scorecard and the free clarity worksheet because they'll help you build a more smarter, more liquid, more strategic plan so your family doesn't get shut out. One of the greatest gifts that capitalism still offers, the ability to own something. If being butthurt after being fired was a real, let's take a look at this.
It was through the roof, and the standards, if you're late, you lock the door. If you go to the bathroom during his meeting, you're not allowed back in. Very simple.
Really? If you go to the bathroom during the meeting, you can't come back in?
It's $1 million P is what they called it. Because that bathroom break you just took, that was $1 million piece of information.
It's actually $1 billion piece of information, because if you know anything about Patrick Bet-David, is that you can take $1 million and turn it into $1 billion. You just have to double it 10 times. This is the type of fucking information you could be missing out on if you go to the bathroom for 1 minute.
So we double it 9 times. 1 million goes into 2 million, 4 million, 8 million, 16 million, 32, 64, 128, 250, 65, to $1 billion. $1 million is 10 doubles away from $1 billion.
Can we get a round of fucking applause here? Because this is the type of shit you're going to miss out on if you go to the bathroom. Because I wouldn't have known that if you take $1 million and you double it 9 times, you get $1 billion. It's that easy. And if you go to the bathroom, you're missing out on this shit. And you could be a trillionaire. You got to understand the math here, because these guys are having multiple meetings a week, most likely. And every meeting could be 30 minutes, an hour. And if you go to the bathroom 2 minutes, so an hour meeting is a $60 million meeting worth of information. That means over the course of a year, you're having billions and billions of dollars worth of meetings. So why are these guys not billionaires? Can we figure this out? And I'll tell you why the information is not $1 million worth of information. It's because it's caca. Caca poo poo.
All right. Let's talk about these guys who are mocking. I don't know if this guy is trolling or not, but let's assume that he's sincere, but he's not trolling. Let's talk about these folks that can't handle Patrick Bet-David standards. Because it's the same standards that built a global company, minted millionaires, changed thousands of lives, including mine. First of all, gentlemen, get a damn haircut. All three of you get a haircut. If you want to make professional money, you got to look and act like a professional. Puku kaka. Marine Corps 101, discipline before dividends. Now, let's address the joke they're trying to make. Only people who have never built anything make fun of accountability, they make fun of standards, they make fun of intensity. And the irony, they're mocking the exact culture that separates winners from complainers. Now, I've worked with Patrick Bet-David for over a decade. I've sat in those meetings. I've been on that battlefield. I see guys squirming because they can't go to the bathroom. And let me tell you something. He's made a lot of people rich. He's also exposed a lot of people who couldn't handle structure, couldn't handle challenges, or couldn't handle responsibility. Now, the bathroom rule, the locked doors, the standard of professionalism. By the way, I think when one meeting at the, not Mar-a-Lago, but what's the one in West Palm Beach? At the Breakers. I got discussed at in front of everybody because I was late from a bathroom break. But let me translate that to you Marine Corps style. If you can't sit through a 30-minute meeting without needing a juice box break, you're not ready for leadership. You're not ready for money. You're not ready for the battlefield of business. And this is America's biggest problem. Too many people, too many weak men want millionaire rewards with middle school discipline. Poo-poo caca. These kids don't understand that PBD wasn't protecting the bathroom break. He was protecting the standard. He's protecting the focus. He's protecting the culture and the respect for the room. And only undisciplined people laugh at discipline. Only unfocused people mock focus. Only non-builders mock builders. Now, look at Patrick Bet-David's track record. He built a $300 million company. Our job now is to take that $300 million company and become a $1 billion company. He's created thousands of full-time entrepreneurs that went from part-time to full-time. He's helped more people earn 6 and 7 figures than any influencer on TikTok or Instagram will ever do. Meanwhile, these guys are online saying caca poo-poo. See, that's the difference right there. You want to win? Stop laughing at discipline and start living it. Marine Corps, we used to say, mission first, feelings last. PBD didn't just walk past low standards. He raised them. He annoyed people, and that's why he wins. End of story. I wish a guy's nothing but the best. Just say the word. As if credit cards weren't bad enough, we got to deal with buy now, pay later. Check this out.
What are you seeing this year? I know these BNPL apps have really been growing in popularity. What are you seeing in terms of how shoppers are using it?
Yeah, well, just as you said, shoppers have come to expect buy now, pay later at checkout. It is something they look for when they start their buying journey. And so for merchants, it's really critical to offer that flexibility to their consumers. Consumers want to have multiple ways to pay, and buy now, pay later is an incredibly flexible option for consumers. And so having it on your site, it really is a game changer.
And I'm certainly seeing a lot of it on e-commerce sites lately. Now, Nicole, from a consumer point of view, what's driving this shift? What should shoppers know about using these?
It's a great question, Jane. I think the number one stressor, and there are many around holiday budgeting, is cash flow. In other words, you know you'll have the cash later, but you need to buy the thing now. And that's why buy now, pay later can be a great tool to just add to your holiday budgeting tool shed if you use it thoughtfully and responsibly, as in not for last minute purchases. And honestly, I cannot believe we're even talking about the holidays just yet, but PayPal is now offering 20% cash back for a limited time on buy now, pay later purchases starting November 17th. So this is free money. This literally pays
Free money.
to start planning early.
Okay, well, good to know. And what are the benefits for a shopper to use these BNPL? What do they get out of it?
Well, aside from the cash back, which is amazing, some buy now, pay later programs don't charge fees or interest like PayPal's Pay in 4. There's no fees or interest on purchases from $30 to $1,500. But overall, I really like the idea that it helps people stick to a repayment schedule, just like you would for regular bills, like your utilities or your credit card payments.
Yeah. And Michelle, I mean, from a merchant's point of view, what do they need to know about incorporating BNPL into their retail ecosystem?
Yeah, so I mean, I think the most important things for them to realize is the things that merchants worry about are those consumers who don't end up checking out once they have items in the cart. And buy now, pay later has been shown to be a real increaser of conversion in the shopping cart. And also, because consumers can now stretch out that payment, they will choose that more lasting item. And so it will also increase average order value. And in terms of getting it, I mean, it is really one click away for a merchant to add buy now, pay later messaging and really have that upstream for a consumer to see it when they start their shopping journey.
Where can people go for more information about this?
Yes.
Holiday budgets.
You smell that? You smell that, bro? I smell bullshit, okay? No interest, no fees, buy now, pay later. It's transforming holiday shopping, transforming it into debt. So let me break this down. Buy now, pay later companies don't make billions because they're just so generous. They make billions because people overspend when they think that there's no pain. Here are the caveats. Number one, no interest doesn't mean no risk. They bank on you missing payments. That's where the money is. Number two, no fees only applies if you're perfect. Studies show 40% of Americans go into Christmas debt and it takes 10 months for them to pay it all off. Number three, buy now, pay later increases spending 20 to 40%. You buy more because you think it's just 4 easy payments. But number four, payments stacking on each month will crush you. 4 payments to Target, 4 payments to Amazon, 4 payments to Best Buy, 4 payments to Walmart. February becomes financial hell. Number 5, they will report you. Late payments can hit collections quietly. Christmas isn't killing Americans. Disguised debt and lack of financial discipline is. Now, if this woke you up, listen carefully. Get out of debt now. Every dollar you spend toward interest is another dollar you invest to earn a rate of return for you. Want to hit the link below? I'll connect you with Mediator Debt Solutions. You didn't get into debt overnight. You won't get out of debt overnight either. But today can be the day you stop the bleeding. Schedule your free consultation, Mediator Debt Solutions, map out your next 30, 60, 90 days, and finally put debt behind you once and for all. That being said, guys, I hope you got something. Please put your comments, biggest takeaways in the comment section below. And if you're looking to connect next year, I got an event for you to be a part of, which is February 12th, right here, 2026, February 12th, 2026. My Dallas New Financial Frontier theme. This is part 2 of the part 2 series. We did part 1 at a Cigars, Wealth, and Whiskey a month ago. Part 2 will be coming here February 12th. And I've got Global Strategy Officer named Jeff Karcher on stage in our event from the Texas Stock Exchange. They're ready to launch and go into business full-fledged next year. We want to hear from Jeff Karcher himself. He'll be at our event February 12th, 2026. Early bird tickets are on sale now. No buy now, pay later. I promise you. I want you to budget, put yourself in the right proximity, invest in yourself. I think the tickets range from $147 to $997. We've already got a bunch of people at the $997 level because they want proximity to a conversation between myself and Jeff Karcher when we're done with cigars, over cigars and whiskey when the interview is done. But nonetheless, it's an amazing networking event around the right proximity of people that are growing and leading here in Dallas, the new kings and queens of Dallas. Will be at the Cigars, Wealth, and Whiskey event, February 12th, 2026, as a Thursday. We'll see you there. That being said, guys, if you haven't done so yet, make sure you smash that like button, drop your biggest takeaway in the comment section below, and share this with people you know can benefit from making sure they can combine faith and finance. It's not a weird thing. From Dallas, Texas, I'm your money smart guy, and until we meet again, continue to live smart, continue to love smart, and be money smart today. God bless you guys. Bye-bye.